Prepare for skyrocketing grocery bills if you think it can't get worse. The global economy is shifting, and your wallet might feel the squeeze. Welcome to Profit and Peril, where we cut through the noise. Today, we're diving into rising costs that could shake your grocery budget and your tech stock portfolio. Remember, this is not financial advice, but it's essential information. As we navigate these turbulent times, understanding the interplay between global supply chains and stock market trends becomes crucial for anyone looking to safeguard their financial future. Americans are about to face a harsh lesson in global economics. Supply chains are near paralysis, affecting everything from pineapples to plastic. In Tennessee, farmer Todd Littleton reports a $50 per acre increase in nitrogen costs for corn, a staple that impacts various food products. This isn't just about oil, it's a perfect storm of fertilizer, feed, packaging, and shipping costs. The ripple effect? Higher grocery prices, reduced consumer spending, and a potential hit to tech stocks. For instance, the cost of shipping containers has surged by over 80% in the past year alone, leading to inevitable price hikes for imported goods. This scenario forces consumers to make difficult choices, potentially cutting back on non-essentials like electronics and tech gadgets. Apple, a market titan, is currently trading at $47.99, down 0.39%. This dip isn't isolated. Tech stocks are pulling back across the board, with Apple down nearly 9% this year. Compare this with 2022, when revenue stagnation raised red flags. But is this a temporary setback or a sign of deeper issues? The current downturn can be attributed to a complex mix of factors, including supply chain disruptions, increased competition, and changing consumer spending habits. Furthermore, Apple's exposure to global markets makes it susceptible to international economic fluctuations, which could have long-term implications for its growth trajectory. Investors are now closely monitoring Apple's financial reports for any signs of a turnaround. Apple's strength has always been its innovation. From iPhones to potential smart glasses and AI-enhanced AirPods, Apple isn't just a company, it's a trendsetter. Recent reports show a 23% surge in China smartphone sales, outpacing a declining market. Discounts and subsidies are helping, but Apple is walking a tightrope between value offerings and maintaining premium pricing. Could this strategy buffer them against global economic headwinds? But here's where it gets dangerous. Apple's reliance on cutting-edge technology places it at the forefront of the consumer electronics industry, but it also exposes the company to substantial risks. In the fiercely competitive market of China, Apple's ability to maintain its pricing power while catering to a price-sensitive customer base is a delicate balancing act. The company's strategic partnerships with local firms and its focus on localization have been pivotal in capturing market share. However, with geopolitical tensions and trade wars looming, the sustainability of these strategies remains uncertain. Moreover, Apple's foray into emerging technologies like augmented reality (AR) and artificial intelligence (AI) is both a potential boon and a bane. While these innovations promise to open new revenue streams and revolutionize user experiences, they also require massive investments in research and development. This financial commitment, coupled with the unpredictability of technology adoption rates, adds another layer of complexity to Apple's growth story. As Apple diversifies its product lineup, the company also faces challenges related to supply chain management. The global semiconductor shortage has already impacted production timelines, and further disruptions could hinder Apple's ability to meet consumer demand. The tech giant's efforts to mitigate these risks by diversifying suppliers and investing in domestic manufacturing are commendable, but the effectiveness of these measures will only be evident in the long run. In summary, while Apple's innovation engine continues to drive its success, the company must navigate a myriad of external factors to sustain its market leadership. Let's compare sectors. While Apple shows resilience with its China strategy, the broader tech sector isn't as buoyant. Consumer cutbacks might lead to reduced demand for tech products. This sector heat map reveals red across the board, highlighting vulnerability. The tech sector's overall performance is influenced by macroeconomic factors, such as interest rate hikes and inflationary pressures, which could dampen investor sentiment and impact stock valuations. Additionally, regulatory scrutiny, particularly in the areas of data privacy and antitrust, poses significant challenges for tech companies as they navigate an ever-evolving legal landscape. As investors assess the potential risks and rewards within the tech sector, they must weigh these variables carefully. The risks are mounting. With grocery prices set to climb, consumer spending could shift dramatically. If people are forced to prioritize essentials, tech stocks could see a drop in demand. Apple's reliance on emerging tech and high consumer engagement makes it vulnerable. Rising inflation pressures could cause investors to rethink their portfolios. the urgency is real. For instance, the Consumer Price Index (CPI) has experienced a steady increase over the past year, indicating higher inflation levels. This trend could erode purchasing power and lead to a decline in discretionary spending, affecting the sales of high-end tech products. Furthermore, the potential for interest rate hikes by central banks to combat inflation could result in tighter financial conditions, prompting a reevaluation of investment strategies. Investors should remain vigilant and prepared to adapt to these changing economic circumstances. But every storm has a silver lining. Apple's innovative edge and strategic moves in China provide a cushion. While risks are real, Apple's adaptability could mean resilience. The sun might just rise over the tech landscape yet. As the company continues to expand its ecosystem and invest in emerging technologies, it positions itself to capitalize on new opportunities and mitigate potential downturns. Furthermore, Apple's commitment to sustainability and corporate social responsibility initiatives could enhance its brand reputation and foster consumer loyalty, providing a competitive advantage in the evolving market landscape. So, is it profit or peril? As grocery prices soar and consumer habits shift, Apple's strategic positioning in China and innovation pipeline could offer a lifeline. Understanding these trends can help you make smarter financial decisions. By staying informed and proactive, investors can navigate the complexities of the current economic environment and potentially identify opportunities for growth and diversification. If you found this analysis helpful, hit subscribe and turn on notifications for more no BS financial insights. Stay ahead of the curve with our expert commentary and in-depth analysis.